Today's lesson, we're going to talk about life insurance in retirement. I'm talking about whole life insurance and specifically a minimum amount of $25,000. And you might say, well, that goes against the grain of what I've traditionally thought. I carried term insurance while I was young and my kids were young and my house is paid off. I don't know if I need life insurance in retirement. And what I'm going to tell you as a financial planner and estate planner is yes, you do. Okay. And the reason you do is when a person passes away, whether that's at 70, 80, 90, the people that they leave behind are in a financial bind. I don't care if they're the wealthiest people in the county. They are going to leave their heirs in somewhat of a financial bind because they got to go to the attorney, they got to go to the court, they've got things that are in probate. And to have a small life insurance policy that there's going to be $25,000 there for your family to just pay some of the immediate bills just removes a whole discussion that really doesn't need to happen in the time after someone passes away. So what we're going to talk about is why do you need $25,000? Well, you know, for the funeral, I mean, funerals can certainly cost more than $10,000. Perhaps they can be less. But this, you know, is based upon national averages. And then we talk about paying an attorney for estate settlement and for probate. And this is for a small estate. I mean, it's going to cost substantially more for a large estate. And typically, people with larger estates are going to purchase and carry all their life way more than $25,000 worth of life insurance. And for an executor, you know, it's just, a lot of times in small estates, the executor doesn't even get paid. They just get picked. And they've got a whole bunch of stuff to do. They even have liability where they're doing that. And most of them, the attorneys that's helping them is going to recommend that they get liability insurance. I've just thrown $1,000 in here as a minimum if this is one of your kids or somebody that you would have a small amount of money that you could just pay them up front. And then the real reason that we get up to this number is this business of 6 to 12 months of income replacement or an additional $12,000. I mean, that's either $2,000 a month for 6 months or $1,000 a month for 12 months. And you might say, well, what do I need that for? I mean, I'm not going to be getting it. I'm dead. I mean, what's happening? And what it is that the bills associated with your stuff, and specifically your house, don't go away when you do. I mean, so if your children are going to handle the settling of the house, the settling of the estate, you still got to pay somebody to mow the lawn, you got to pay taxes, you got to pay insurance. If there's a mortgage on the house, you got to continue making the mortgage payment. Just keeping the place open. People are going to be staying there. Other expenses, you could have a credit card bill that's outstanding. I mean, or the beneficiary could just, or the executor, these could all be the same person, which is one of your adult children, is, you know, it's just going to reimburse them for the expenses. They're having to take time off of work. In any case, I don't want to get rambling on. Your family is going to need this money, and they're going to need it even if you have it somewhere else tied up in the estate. This is going to come very quickly from the insurance company, and it's going to be available, and it's going to be usable, and it's going to be gone as well. Now, if you're a married couple, you're going to say, well, my spouse will deal with that. And that's true, and they'll still have a Social Security check, or they'll get yours if yours was larger. But most married couples that are getting 2 Social Security checks really manage them as one. I mean, they got a $2,500 a month Social Security check and they got a $1,500 a month. So as far as they're concerned, they got $4,000 a month coming in from Social Security. Well, as soon as a person dies, Social Security will even take back money they already paid you. The smaller check is going to go away. That's a simpler way to put it. So in that example I just cited, those people are going to go from $4,000 down to $2,500, and that's going to happen instantly. This can fill the gap. Many pensions are reduced or stopped, and the bills remain, whether there's a surviving spouse or it's just a single person that, if you don't have any kids, you're going to have a niece or a nephew or somebody that's keeping watch over your stuff until the whole thing gets settled. This is necessary, and it's necessary for as whole life because you may live a long time. Okay? I'm Hans Scheil, and I thank you for listening.